Londra'dan herkese merhaba. Bugün piyasalara özel bir parantez açıyoruz. Dünyada ve Türkiye'de ekonomide büyük resmi konuşacağız. Bugün David Lubin'le birlikteyiz. Kendisi Chatham House kıdemli araştırmacısı. Hi David, thanks for joining our program.
My pleasure.
For a long time, when we meet, we are always talking about the big picture in the world. But now, what feels new is that, we are always talking about trade war, fragmentation, protectionism and everything. But what feels new now is this so-called rupture between US and Europe. From a financial perspective, what kind of a risk does this pose, do you think? And do you think the markets in any way or fully price this in?
It's difficult to say. Rupture is certainly Mark Carney's word to describe the chaos that's evident in the international order. And what that order means, what that change in the order means for global economic activity is still highly uncertain. In the long run, I think it's easy to argue that an international order without a global hegemon, without a global rule setter, is an order that is likely, it's an order in which global trade growth is likely to diminish. Mm-hmm. And so I think we will see less trade over time. But right now, it doesn't seem to be the case. Global trade growth, certainly towards the end of last year, remained relatively robust. There are signs of slowdown. Chinese export growth is slowing overall. US import growth is slowing overall. But broadly speaking, the international trading system is holding up relatively well. In the longer term, however, it's worth bearing in mind the lesson of the last 200 years. And the lesson of the last 200 years is that trade growth only really thrives when there is a global hegemon to stabilize the international system. So, for example, in the second half of the 19th century, when the UK, when Britain was a global hegemonic stabilizer, trade growth increased very sharply. And in the decades after the Second World War, when the US was a global hegemonic stabilizer, trade growth also thrived very well. So you have Pax Britannica, as it's called in the 19th century, Pax Americana in the 20th century and up until quite recently. What kind of Pax are we moving into? If it's a Pax, if it's an international order, the Latin word for peace, Pax, if it's an international order that is characterized by friction and by a lack of a single rule setter, then I worry that it will be difficult to maintain strong trade growth. It's true at the moment that middle powers, Canada, Europe and others, are trying to maintain parts of the international trading system. The European Union has just signed a trade agreement with India. It's just negotiated a strategic partnership with Vietnam. And it's agreed a trade agreement with Latin America, with Mercosur. But in spite of the evidence that we have that countries, liberal-minded countries, are trying to preserve elements of the liberal trading order, I think the historical record makes me think it's difficult to be too optimistic in the long run.
So, David, for how many years have you been following markets economy?
I'm very old, so decades.
But for years, let's say, you are following markets. So what worries you most now? Because from what you say, you are saying that the cost will be on the trade. Cost of this rupture will on global trade. Yeah. But apart from that, do you think this has something to do with the, challenging the throne of the dollar as well?
Yeah. I think that's right. The international financial order is, over the medium term, as much at risk as the international trade order. And how exactly we'll see that is difficult to predict because, again, the historical record, in my view, indicates that changes in the distribution of currency power occur much more slowly than changes in the distribution of economic power. So China's economic rise doesn't necessarily immediately translate into some meaningful global role for the Chinese currency, the renminbi. The dollar will remain a core part of the international monetary system even as the United States' dominance of the global economy continues to diminish.
At Davos, I heard from lots of people saying that if Europe can survive this Trump-led period, they can continue in a more healthy way doing business with, U.S. Do you agree with them, or do you think now we have a deeper structural change?
I think that optimism about Europe would be easier to sustain were it not the fact that European countries, in many European countries, are suffering their own populist challenges, and the rise of populism within domestic politics in European countries works against the kind of integration within Europe that's necessary to allow Europe to assume a more credible role on the international stage.
I mean, do you think dollar will lose its strength more, and do you think euro can preserve its value? How do you see the parity?
I mean, that's a very interesting question, because one very important thing to bear in mind in all of these discussions about the dollar is to bear in mind the difference between the role or the status of the dollar in the international monetary system and the level or the exchange rate of the dollar. For decades, we've seen huge swings in the value of the dollar, but despite those huge swings, the status of the dollar, the role that it plays in the international monetary system, has remained pretty constant. It may be that what we now are going into is a period where a decline in the value of the dollar, which does seem quite likely over the next few years, given the fact that the dollar remains very strong by historical standards. So as the dollar declines in value, that may coincide with a decline in status in a way that we haven't really seen in the last few decades.
So it might be a big challenge to the dollar throne.
Yes, and critical to that, I mean, if you step back and say, well, what was it that gave dollar its preeminent role in the international monetary system? Well, I think one very important factor to bear in mind is the role that the United States military dominance plays. It tends to be historical regularity that the top currency is printed by the top military power. And as long as the US retains that status as the top military power, the dollar will be difficult to shift in terms of its key role in the international monetary system. But there are other elements of the US institutional framework that were upholding the dollar's status. The trustworthiness of US rule of law, which to some extent people are beginning to question, and the independence of the Fed, which the Trump administration is trying to do its best to undermine. Now, last week we had the announcement that Kevin Warsh will take over Jay Powell as the next Fed chairman, and that, at least according to one argument, has given some support to the dollar, although the reason why the dollar strengthened in the aftermath of the announcement that Warsh would be the next Fed chair may not exactly be traceable to that announcement. It could just be the fact that on the same day, the United States published very strong industrial production survey data. The ISM went above 50 for the first time in many months. So optimism about the US economy might have been a better way of explaining the recovery of the dollar than the appointment of Kevin Warsh, because we're still faced with the reality that Trump will put a lot of pressure on the incoming Fed chairman, as much pressure on the incoming Fed chairman to cut interest rates as he has on the outgoing chairman. And so the politicization of US monetary policy remains a dominant theme. And I think that over time could undermine the status of the dollar.
So we are talking lots of different things now. The big picture is really changing. So in this big picture, how do you see the role of countries like Turkey? Because they're always talking about rich countries, geopolitically important countries. Now in this changing world, what is the role of Turkey?
Well, I mean, I guess the starting point for any discussion along those lines is to, bear in mind the close relationship that President Erdogan has with President Trump. And that so far has been a stabilizing force for Turkey. The chance that Turkey may be able to negotiate away the S-400 problem to get access to F-35s, the delay in any fines imposed on Halkbank, the stabilization of Syria, the sort of folding in of the Syrian Kurds into the Syrian National Army. All of these things support Turkish geopolitical stability and therefore support Turkish stability. So for the time being, it's a kind of paradox. The thing, i.e. the Trump administration, that is arguably destabilizing the world is paradoxically acting as a source of stability for Turkey at the moment.
It's so interesting because, do you think this geopolitical importance can compensate with the economic difficulties and everything in Turkey as well? From foreign investors' perspective, how do you see this, especially in terms of portfolio inflows and everything?
I think foreign investors at the moment are seeing Turkey in a very positive light. And that's because, since the arrival of the new economic team a year and a half ago or more, evidence of fiscal stabilization, evidence of monetary stabilization have shored up international investor confidence. Last year's fiscal performance was extremely good. The government's aiming for a primary surplus, this small primary budget surplus in 2026. Real interest rates remain high. And so there's a lot of confidence that as long as fiscal policy remains relatively tight, monetary policy remains relatively tight, there are chances for macroeconomic stabilization. And against the background where US monetary conditions are relatively loose and are likely to continue to loosen, US interest rates more likely to go down, the dollar continues to weaken, that sets the stage for a strong capital inflow to emerging markets generally. And given the fact that, inflation-adjusted interest rates in Turkey are really quite high by international standards, it's only Brazil and Egypt among investable emerging economies that have higher real interest rates than Turkey. Against that background, Turkey, the fact that Turkish real interest rates are so high acts as a kind of magnet for capital inflows at a time when the world's investment community is really quite enthusiastic about emerging markets overall.
Last year, everybody was talking about saying that emerging markets are the star of the financial markets, but Turkey couldn't catch up that performance last year. Do you think what makes it different this year is the geopolitical importance of Turkey, and do you think Turkey can decouple in a positive way?
Obviously last year, investor confidence in Turkey was seriously knocked in March last year. And, the classic line about the investment community is that memories are short. And the sort of combination of time and the continuing evidence of disciplined fiscal and monetary policy is allowing investors to re-engage with Turkey despite the volatility of the first half of last year.
So last question, what is the biggest risk and opportunity for both Turkey and for global financial markets?
I think the most obvious risk is inflation.
For Turkey.
For Turkey and globally. And at the moment, global inflationary pressures seem to be relatively muted. And the reason for that, or one very important reason for that at least, is the fact that global commodity prices are quite low. The World Bank, if you look at the World Bank's commodity price index, for example, the inflation rate of commodity prices measured by the World Bank, the inflation rate of commodity prices has been negative since February last year. So for such a long period where commodity prices are so weak, obviously metals prices have been very elevated recently, but agricultural prices and energy prices are really quite depressed. As long as that remains the case, inflationary pressures globally remain under control. And in the United States, inflation expectations remain very well anchored. If that changes, in other words, if the market's narrative that low inflationary pressures make room for further interest rate cuts in the United States, then it's difficult to see any obvious threat to global confidence, to global asset prices. But if there is a risk that interest rates have to go up, or if interest rates can be only cut by much less than the market is pricing in, then that would, I think, be the most obvious threat to global financial stability.
So inflation can create this risk or opportunity as well.
Exactly.
Thank you so much, David Lubin, for joining our program. Evet, Londra stüdyomuzda Chatham House'un kıdemli araştırmacısı David Lubin'le buluştuk. Sözü İstanbul'a bırakalım.